Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Dan O'Prey, Chief Product Officer at Bakkt. We're going to discuss creating an economy via digital assets, a dynamic economy, that is. Dan, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me.
And before we talk about Tradify and D5 and the intersection of all of this, give us some background on Bakkt.
Sure. So Bakkt's fairly unique in the space, in that we're actually sort of at the intersection of crypto, loyalty, and payments. So we have multiple different businesses within those, and where it gets really interesting is the overlap between those different areas. So we are kind of like a platform that'll enable non-crypto companies to provide crypto services to their consumers. Behind the scenes, we have the licensing, we do the custody, we provide all of the services to enable them to embed trading, rewards, payments, payouts in crypto and fiat and other digital assets.
You know, it's so interesting, Dan, the way the conversation has shifted from us versus them to seeing how they're intertwined and how, you know, legacy institutions are leveraging companies such as yours that have the technology, have the speed, and use their scale to get it to market. So what are your thoughts around the intersection with TradFi and DeFi and the overall crypto landscape?
Yeah, the intersection is really important. We very much believe, you know, at least for the near to midterm future, it's going to be a hybrid approach, right? The world is not going to cut over from one system to another overnight. So whether, you know, however long that takes, there's a massive window of opportunity for traditional financial institutions to play a really big key role as a trusted intermediary, as ironic as that can be in this space, to give people access through highly regulated, trusted environments. Where they already have their assets as well. So like we've seen with other asset classes, there seems to be a start which is focused on a particularly, you know, a new or unique asset class, but that becomes broadened and brought in, and everyone wants to sort of manage and interact with their assets through where the rest of their assets already are. So there's a huge role for traditional financial institutions to play in helping that adoption and bringing that trust and regulation.
Right, right. Well, let's talk about the crypto landscape right now. Clearly, it's volatile, just like, you know, the other asset classes. Is that impacting growing adoption, or do you think this is the time to use that volatility and you know, the new projects, the new innovation is coming forward?
Yeah, I mean, this is not the first sort of downturn in the market. Gone through a few in my life. And so I think, you know, it is expected, it is to come. In many ways, it's actually healthy for the industry. There was a lot of, you know, shall we say, sort of irrational exuberance last year, a lot of risk taking, a lot of less discerning over looking at different crypto projects. And there are, you know, big distinction between different, you know, projects within crypto that tend to be lumped together as one asset class. And a lot of different business models and different players. And to some extent, you know, as terrible as it is to see people lose money and,
right,
and have that risk, it's healthy for the industry to clear out some of the more risky areas. And that actually presents an opportunity for those trusted regulated institutions to come in during a bear market, prepare for the next bull market, and do it the right way.
Yeah, I mean, we'll think about it, you know, the early 2000s, we went through the same thing too, shaking out those outliers, and then in the social media age, so it's always ripe for innovation. I mean, it doesn't matter what asset class it is. What about Bitcoin and its utility? Or is it a mature asset class, or is there still, what will come next with it?
Yeah, so I think it's a great distinction to make in that, you know, as I mentioned, not all crypto projects are the same, and many will distinguish between Bitcoin and crypto, and Bitcoin being a truly decentralized, you know, leaderless, no foundation, no coordination, truly decentralized peer-to-peer electronic cash. That's what it was originally designed to be in the original Satoshi white paper. We're starting to see a shift from the sort of narrative of Bitcoin just as an inflation hedge or a store of value or a digital gold as a metaphor, which is a perfectly valid sort of starting use case, to actually back towards that peer-to-peer electronic cash. So that's where I think companies like Bakkt, and for me, it gets most exciting. How can we leverage Bitcoin and the layer 2s like Lightning Network to actually provide utility as a means of transaction,
right,
a medium of exchange? Whether the consumer knows they're using Bitcoin or not under the hood, it's a new alternative payment rail that can be leveraged far more efficiently, even for fiat payments.
Well, and that's a great distinction to make. I think, you know, we tend to think very US-centric when we're here, and the headlines are focused on the values of, you know, where Bitcoin and other digital assets are moving, but the fact is billions of people around the world are using those types of technologies to transact, especially cross-border payments or those that don't have the legacy banking institutions that we have. So it's kind of already happening, which leads me into, what are your thoughts around crypto regulation, right? I mean, some kind of framework has to exist.
Yeah, I think for centralized entities such as ourselves, who are going to be the on-ramps into this new network and the ones that can provide that convenient, easy-to-use experience, through our partners, regulation is going to be very important. And we're starting to get more and more clarity across different sectors. I know it is an extremely difficult sector to regulate. There's lots of different arguments about how that should be done and whose purview it falls under. So that is all sort of starting to shape up. I think, particularly with Bitcoin, there is quite a lot of clarity. The SEC, Chair Gensler has said it is a commodity. It's not going to fall under the purview of the SEC. That's very, very helpful for Bitcoin as a commodity to be adopted and used as a form of payment or money. But there is still a long way to go. There are other sectors within crypto, DeFi, stable coins, maybe NFTs, that are very different types of instruments and a very different conversation at different stages as they mature.
Right, right. Well, I think sometimes everything gets under the crypto bucket.
Yes.
When there are distinctions between, okay, this is the underlying technology, this is, we can use NFTs this way, Bitcoin can be used that way. And I think, as an industry, and certainly those of us in the media need to make sure that the audience understands that, Bitcoin doesn't equal crypto and crypto doesn't equal all those other buckets.
Absolutely, yes. Yeah, and as you said, for the early 2000s, right, everyone talked about .coms as if all internet companies were the same. Mm-hmm. Now we talk about social media companies, e-commerce companies, and different companies within that, and the merits of the companies within each of those sections. So I think crypto as a large bucket is still sort of that .com internet bucket, but within that, different segments and different projects that are at different stages of maturity, and certainly Bitcoin being the most mature of the set.
All right, Dan, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.